All right, good evening, everybody. Please take a moment, pause the video, read the disclaimer. I am not your financial advisor. I am not a financial advisor. Please take everything I say with a grain of salt. I am just a guy that does a lot of research in a room somewhere in the country. So please read through this. Every opinion expressed is mine and mine only. Do not make any decisions based on what I say. Please do your due diligence. Thank you very much. And before we get into everything I was intending on speaking about, just to let everybody know, I did check in with Matt. He said I was allowed to go live. He has the link. We'll see what he does. We'll see. I doubt he's going to come on. Now, as far as the thumbnails go, Gemini is your best friend. And as Tanner says, this is the worst AI we'll ever get. And it is incredible how good the thumbnails are. What do you mean is Steve getting salty? No, I'm just saying I checked in with Matt. Matt was saying that I don't send him the links. I send him the links. See what happens. So if you're going to do anything where you need thumbnails or anything, I got to tell you, Gemini is incredible. So I'm going to keep using it. I think the thumbnails are coming out pretty damn good. So I am waiting. I normally don't like doing the whole politic thing, and I am interested to see what President Trump says. I don't know if I'm going to get to it or not, but he's supposed to deliver remarks on the economy. That's the only reason why I'm kind of interested in it. But I want to go over a lot of stuff. Give me a sec. I need to close the freaking window. Something's making my eyes burn. Give me one sec. Oh, shit. You know what? I don't think it's the freaking window. I forgot. Something is cooking in the kitchen, and it is making my freaking eyes burn. Anyway, I'll deal with it. So market slightly down today. Interesting because we have an anticipated Fed cut tomorrow. So I guess the market's not really trying to front run it. So we did have breaking news. And the breaking news is Chris Patel is now long Nvidia. I don't know if everybody saw this or not. Pretty wild. It seemed like he was coming around last night, and he's now long Nvidia. Normally, when Chris takes a long position, things go well. Pretty excited about it. And what he put in his tweet this morning, what am I supposed to call these things? Tweets or posts? I don't even know. Quote, while some people may be waking up to the China export of H200 lift, but China not wanting to buy and reversing some of the gains, I'm seeing something different. The president of the U.S. knows that Blackwell Rubin chips are ... Dude is out here tweeting about it and willing to allow sales. Trump is a lot of things, but the one he's really good at is selling. Expect Nvidia to get a massive boost in AI chip sales going forward, if not directly from China, indirectly from China. Also, another catalyst, other countries are likely to start a wave of AI spend to not get left behind. Well, I'm glad he's on board. It's always good having Chris on board. Oh, you know what? This is unfair. This is really unfair. I called Matt to ask him if he was joining the Quarter Zip crew online. And he said, no, I think you're going to go out alone tonight, which is fine. I'm happy to. But for the record, I checked in with Matt. He has the link. He's always welcome to come on. I did my part. So we had the Qs up a little bit today, 0.12%. SPY down, basically flat, fell 59 cents. I mean, this is not a market that's trying to front run whatever's going to happen tomorrow. So we had Treasury yields slightly higher, around 4.18%. And the expectations on the Fed, 88.6% that we get a cut tomorrow. We got the Jolts reading, which is the job opening and labor turnover report. Job openings came in at 7.67 million versus 7.66 million previously. This is basically unchanged and in line with all the expectations. So it is significantly below the peak that we saw during the post-pandemic hiring boom. So if we go out several years, it's been a gradually cooling labor market, but I don't think you can really look at it like that because we had immense growth after a surge in unemployment and layoffs and positions closing. So I don't think it's fair to look at a long-term Jolts report on in that way. So we'll see. Some people are thinking that the Jolts today reinforced the soft landing narrative. I think we have a no landing, open for discussion. So what else do we have? So we got the Fed tomorrow. Let's see what Powell says. I should actually get a poll out to see what everybody thinks. I think it's going to be a hawkish cut. We'll see. Seems like 25 basis points are already baked in. And the real question is going to be how many cuts, or does Powell say nothing in the regard? Is he going to signal for 2026 what's going to happen, knowing he's a goner in May? Are we going to get a new dot plot? Is he going to hint at a pause? I have no idea. I mean, let's think about it. There's a January, a March, and a May FOMC meeting. So, there's an April. I'm sorry, April and June, no May. So January, March, April, and June. So he'll be around for 3 more Fed meetings after this. I have a feeling it's going to be a hawkish cut, unfortunately, with the hawkish part. So we'll see. I think the rate cut is baked in. If we don't get a rate cut, I am expecting that the market is going to go down significantly tomorrow. So we'll see. I think the market's basically told us today that we're not going to front run Powell, and everything was just sideways. So here's one of the bigger stories before we get into Nvidia. Silver. I never thought I'd see the day silver broke $60 for the first time ever, with spot and futures both hitting new records. Intraday highs at 61. I never thought I'd see the day. Freaking silver. All the freaking silver crazies that have been screaming silver $100 and screaming that the correlation to gold is broken and it is going to run. Well, they're not crazy. They're actually right. Silver's up 100% year to date, and it's outpaced gold and other major commodities. So silver miners are ripping, silver-related ETFs are ripping, and of course, the actual bullion is ripping. So the real question is why? I mean, part of it's a weak dollar and expectations of Fed cuts. Part of it, supply constraints, industrial demand, increase in data centers, increase in EVs, electronics, and some people who probably have a tinfoil hat just like me consider silver a hedge against fiscal and debt concerns. So, be that as it may, silver is a tangible asset you can hold in your hand, and people love it for some reason. So we'll see what happens. I don't know if it's going to keep going. I think silver at 60 is crazy, but we'll see. So let's get into Nvidia and Oracle. These are the 2 big ones, and then we'll go into JP Morgan. So I want to play a video very quickly, and then I'm going to give you my take on Nvidia.
CEO, Patrick Moorhead. Pat, these chips are a couple years old, a generation, two, depending on whether you're counting what's about to come out or not. Is this about securing Nvidia and American technology place in the global AI ecosystem, or does it perhaps end up accelerating China?
So, John, I've been pretty clear on this and consistent. We need to sell as much technology that cannot create the best frontier models out there. We need to export our technology to do this. And I do think that it's a net positive.
All right, so Trump is walking on stage. Right after this video, I'll go into that. Let's see what he has to say. Maybe we watch it, maybe we don't.
For the US, because these aren't powerful enough to build the next generation of models that need to be out there, and it keeps Chinese developers on CUDA. And that's good for the United States overall, particularly if you look at where Huawei technology is typically exported to, places like South Asia, places like Latin America, where strategically it's better to have US technology there than Huawei technology.
Are smartphones and electric cars, in a way, a cautionary tale here? And I know AI is way different, but if you look at Europe and Android's presence there, and even Chinese OEM Android presence there, it's pretty strong. And then electric cars, there are a lot of Chinese electric cars flooding the European market. I mean, if the US isn't aggressive enough about making its technology available, could that be the AI landscape 15 years from now?
Yeah, it could, John. I'm glad you brought up Western Europe, because for the telco space, that was a big battleground. And what ended up happening is the EU decided that having Huawei telco infrastructure was not a very good idea, particularly when the US was considering not sharing any secrets with the EU, which impacted the potential for its security. And I think we'll wind up in a very similar place here, John, particularly in Western Europe. I think the Eastern Europe, South Asia, and Latin America are really the areas of concern where Lenovo's very strong with its Belt and Road initiative.
All right, it looks like he's going to start talking. Let's see if this is anything that's worth listening to it. I think it's interesting ahead of the Fed meeting. So let me find, here we go.
Standing outside tonight. It's freezing. They got here yesterday like at 2 o'clock in the morning or something. Well, I'm worried about them. Would anybody like to give up your place? Let some people come in from the cold. You go out to the cold. I don't think so. I just want to say hello, Pennsylvania, and I'm thrilled to be back. This incredible Commonwealth with so many proud, hardworking American patriots. That's what you are. So am I. I'm a proud hard worker. I'm a proud patriot, but you're a proud patriot. Thank you very much, everybody. It's a great reception. You know, we're on to expose what happened recently when we took over. You know, it's 10 months, and already we have the largest investment ever made in the history of not our country, of any country anywhere in the world. Think of that. But let me begin by wishing each and every one of you a very Merry Christmas, Happy New Year, all of that stuff. Remember when I started? In 2015, I made my first speech, and I said, we're going to bring back Christmas. Remember, the radical left wanted to get rid of the word Christmas. I said, I don't think that's going to work out. And we did it, and now everybody's saying Merry Christmas again. But just over 1 year ago today, with your help, we saved America. That's what happened. We saved it. In the most important election victory possibly in the history of our country was going down. We were a country that was being scoffed at, laughed at all over the world. We won all 7. Thank you, Charlie. She said, and you saved us. Who are you? Stand up, please. Who said that? I love her. Only in Pennsylvania can this happen. I know this state. By the way, last election, did we kick ass? We won. That means we won 3 times in a row, as you know. But we won all 7 swing states. We won the Electoral College, 312 to 226. We won, and by the way, the real vote was much more than this, but we wanted to make it too big to rig.
It'd be nice if you just got on with the remarks about the economy. I mean, come on.
86% of all counties in America, 2,700 to 525. That's good. We did it. Not me, we did it. And now, after just 10 months in office, I'm pleased to report that America is winning again. Pennsylvania is prospering again. And I will not rest until this Commonwealth is wealthier and stronger than ever before. Remember when Biden got up and called you a state? That was not good. He said, it's great to be back in this state. Oh, where are we? Where are we? What state is it? It's Pennsylvania. Oh, okay. No, we're respected again as a country. We're respected. Since my inauguration, we've created nearly 60,000 new Pennsylvania jobs, including 4,000 Pennsylvania manufacturing jobs that the Democrats gave up on. You're doing better than you've ever done. Under our leadership, more than 40,000 Pennsylvanians have been lifted off of food stamps, 40,000. And working with a great guy, remember David McCormick? He used to go to every rally I had. He knew what was happening. And he's here again, as usual. I can't get rid of this guy. Where is he? He got a little lucky, though. You know, in Butler, a place called Butler, Pennsylvania. I love Butler, Pennsylvania, but it was amazing. And we had a tremendous crowd, like 55, 60,000 people. Then I called David. I said, David, come on up. He was working like hell to get elected. It was a tough race.
Everyone, I just want you to know I'm probably not going to watch this if he keeps doing this much longer. I only care about the remarks on the U.S. economy and if he mentions Powell or anything about the Fed. I'm not going to sit here and watch him go on and on.
I could have had a little differently shaped ear if it weren't for you. You know, you got very lucky that day. People don't talk about that, but I remember I called him up and I said, just stay there, because he was walking a little bit slowly. I didn't want to take the time. Oh, boy, that was a good day for you. What a job he did. He's really a great guy, and his wife, Tina, is fantastic. Thank you. Stand up, brother. He's a lucky man. Working with Senator David McCormick, we've secured commitments for nearly $100 billion of investments in Pennsylvania. We were up here a few months ago. Some of the greatest energy companies in the world made that. We were doing it on a beautiful day. A little warmer than it is outside today, David. But over $100 billion, and we've saved a great American company. You know, we saved, this little group of people and me, saved a little company called U.S. Steel, and it's hot as a pistol now. And we have the keys to the company. It's always going to be here. It's never moving. They said, what happens if it moves to Japan? I said, you can't move a steel mill to Japan. You can move a headquarters, but the steel mill stays here. That's all that matters. And I will tell you, the company is spending billions and billions of dollars, and there was no second by comparison. Other companies were interested, and they really are. They call me all the time, tell me they're really excited about it. And, you know, they're building a lot of additional plants. It's turning out to be beyond what anyone thought possible, but we had to save U.S. Steel. U.S. Steel was one of the greatest companies, which really, for a long period of time, years ago, the greatest company anywhere in the world. U.S. Steel was, you see it with the big factories that were, 2 years ago, now it's starting to fill up. The tariffs have filled it up because people are coming here. Other steel companies are coming to Pennsylvania now because they don't want to spend 100%, 50%, 25% on tariffs are all coming in. It's amazing. The word, remember when I said tariff? My favorite word is tariff. True. But then I got a lot of heat from the fake news. Look at all of them back there. I took a lot of heat. I got up early on. I said my favorite. It's turning out, tariffs are bringing us hundreds of billions of dollars. I just helped our farmers out because they're starting to do really well. But in order to try and negotiate, some countries played a little cute, and we just gave them right out of a tariff money. Cost us nothing. Right out of the hundreds of billions that we've taken in. We gave the farmers a little help, $12 billion, and they are so happy. And all they want is a level playing field. And now it's happening. And the tariffs are making them rich. It's going to be, you're going to see what happens over the next 2 years. It's like a miracle is taking place. But we've taken in hundreds of billions of dollars, really trillions. Scott, we have the great Scott Bessent. Scott, stand up. And if you add to that all of the companies that are pouring their money to building plants in Pennsylvania and many other states, auto plants, AI plants, plants of every type, which we would have never had if we didn't put the tariffs on. Did you see where Europe now is saying, I think we got to start doing what Trump is doing. We've got to start putting on tariffs because we're getting our asses kicked, and it's true. But Scott, if you really think about it.
All right. I'm going to come back to him in a little bit. I really don't want my channel to get political. Obviously, the title of this was Live. President Trump delivers remarks on the U.S. economy. I was hoping that he was going to deliver remarks on the U.S. economy, especially on the eve of what is expected to be a Fed cut and Powell's speech. So I'll come back to that in a little bit. Let's see if he actually starts talking about substance. If he doesn't, I'm not going to come back to it, and I will just throw the video into Gemini and get a transcript and basically read it myself. I'm not sitting here for an hour and a half listening to that. If it was of substance, that's one thing, but we're not learning anything from it. So let's get back to Nvidia. So this is huge because the U.S. is going to allow Nvidia's H200 chips to be exported to China. And it's interesting because we're going to be taking in 25%. It's funny how they made that deal. So the $65 billion that Nvidia had speculated they would do in revenue for Q4 did not include any China revenue. So when I think about this, I don't think it's going to impact Q4 really, but this is going to have big implications for 2026 and 2027. The way that I look at this is China would not have cared about this if the H200 chips weren't better than Huawei's chips. And I think it just goes to show you how powerful Nvidia's chips are. Because even the H200s, which were before Blackwell, if those are able to be sold in China, the numbers that I've read are that this could add 15 to 20 billion in revenue annualized. So that'd be pretty good. It shows me that AI demand is alive and well on a global scale. And this could have the market cap of Nvidia continue to go up. So I'm excited for this. This could help extend the runway for Nvidia's growth. And the numbers for Nvidia look quite enticing. I mean, I've shared this several times, but Nvidia's really didn't do anything today. It's at 184.97. And when I look at where Nvidia is today versus a bunch of companies in the market, And I think, you know, Chris likes to not necessarily care about the analyst expectations. And I agree with him to a degree. Okay. But at the same time, the reality is that Nvidia is expected to do 103% of EPS growth over the next 2 years. They're trading at 19 and a half times forward earnings. They're trading at a lower multiple than Coca-Cola with 15% EPS growth. And I showed him this last night. Nvidia at 250 puts them at 26 times forward earnings. That puts them right between Alphabet and Apple with a lot more EPS growth. So here's the thing. I'm going to say right now, and everybody knows I like to make predictions of some type. I can see Nvidia hitting 240 to 250 next year, if not more. I am fully ready for a sell-off at some point. But when I look at what Taiwan Semi is doing in revenue, when I look at all the deals, when I look at the fact that Jensen said that all cloud chips are sold out, the hyperscalers can't get enough, I think we're in a good place. I'm happy that I was still buying Nvidia in the spring. I'm happy I was buying Nvidia in the summer. And so, Chels, Andy, I don't like doing very short-term predictions. 185 was my end of year 2025 prediction. It surpassed it. Right now it's at it. So it already reached where I thought it was. Tanner was more correct than I was on it because he was saying that, I think Tanner was saying he thought it could go to 220 this year, maybe 225. And Nvidia hit 210 or so, maybe 215, and then, you know, retraced. So next year, as long as we get the growth rate going, I think it's going to be really interesting. So I'm going to show everybody where the consensus rates are on a forward basis for Nvidia. And I will tell you, Seeking Alpha, I know we've been using Fiscal AI a lot. I do like Seeking Alpha's stuff. So this is where the projections are for EPS. It's just going straight up. We go to the earnings estimates. Let's look at the revenue. This year, Nvidia is expected to do 63% in revenue growth. Make it a little bigger. There we go. 63% year over year revenue growth for this fiscal year. And keep in mind, this is 2026 is really 2025 for Nvidia because they report not on a calendar year. Their fiscal year ends in January. So 11 months is in 2025. So I consider this 2025 numbers. 63% year over year growth. If they come in with 213 billion, I've never seen a company do that type of revenue that is expected by 62 analysts on the street to do 48% year-over-year growth the following year. That's an insane number, everyone. And their profit margin is around 55, 56%. If they do 316 billion in revenue, that's going to be 158 billion in net income. That'll be the most any company has generated. Then you got another 27% of revenue growth that 45 analysts are making a projection on. This runway has a lot of steam. And the one thing, and I'll say this, Amit, Chris, and I had a very long conversation in 2023. Maybe it was early 2024. And we were talking about the amount of CapEx expansion until we get into a boom bust cycle. And we couldn't agree on a number, and we still don't agree on a number. Back then, I said we probably had 3 years before it went into maintenance mode. I was incorrect. And I have since expanded my runway quite a bit. And we're finishing out 2025. And I do think that we have another 24 to 36 months of pure expansion in data centers and chips. Now, maybe that number changes, maybe it doesn't. But I do think NVIDIA's got at least another 2 years of solid growth ahead of it. I don't like making it in this type of thing where every type of computer component has become a cyclical market with boom bust cycles, except right now for NVIDIA's chips. Do they get to 400 billion? Who knows? But the range is pretty crazy. I mean, on 2028, which is really the 2027 numbers, the consensus is 401 billion, and you got some people with a high of 614 billion in revenue. That would be incredible if they do that. If they do, I don't know. But NVIDIA trading, and I'm not going to play the clip, but trading the way under Costco, it's crazy. It just shows you that there's so much room that this can run that I'm excited to stay in it, especially with robotics, Optimus, full self-driving, not even here yet. So we'll see. I think it's one of the best risk rewards at the moment. And when I look at the EPS growth, it's huge. 57% this year, 59% next year, and then 30% the year after. I mean, this thing is trading at a forward level that is inexpensive. And then when I think about the amount of shares that they're going to be buying back, them becoming a holding company with deploying capital into AI investments, that's really interesting to me. When it comes down to it, they could become the Berkshire Hathaway of AI, because if they keep taking equity stakes in companies across the board, they'll have a pretty robust portfolio. It's going to be interesting. I really don't know what's going to happen in the future. Nobody has a crystal ball, and I'm just going off where the data points me. And obviously, I have not exited my position yet. I have no intention of exiting my position anytime soon. I think this can run significantly. And even though I've been saying that Salesforce is my dark horse for 2026, I do think NVIDIA has some of the biggest upside potential in 2026. It's not a dark horse, but I think that the common theme is going to be the big companies get bigger, and NVIDIA is going to be really interesting. So the next thing on the docket is Oracle. Oracle earnings are tomorrow, I believe. I'm getting it mixed up. Oracle's either tomorrow and the following day is Broadcom, or it's reversed. I feel like Oracle's earnings are tomorrow after the bell on the 10th. But Reuters ran a piece today on Oracle saying that they're heavily relying on OpenAI, and this is a debt finance expansion, which has spooked some investors in the market. And the concerns are that an AI bubble or slower adoption could make its leverage painful. I agree. Oracle is the one company, and it's not a true hyperscaler, but they're fueling this with a massive amount of debt. And no matter how you spin it, tomorrow is incredibly important. And if we don't get a rate cut, and if Oracle shits the bed, or they come out with some crazy number on the debt load that we didn't expect, watch the bears come out and watch the bears start saying how this is an AI bubble fueled by debt. I'm going to show you why this is incredibly possible for them to come out and say. So I ran the numbers on Oracle. I think it's in this spreadsheet. Just give me one moment. I did run it in this spreadsheet. So I'm looking at net liquidity. And anybody who's a part of the private group has access to this sheet with all the tabs. Over the weekend, I am going to make it prettier. Okay. I'm going to clean it up and label a bunch of stuff differently. But Alphabet has 98 billion in cash on hand. I think I need to make it just a little bigger for everybody. Yeah. God damn it. Microsoft has 102 billion in cash on hand. Amazon 94 billion. Meta 44 billion. Oracle's got 11 billion. Now these numbers for Oracle are going to change tomorrow. Okay, so don't hold me to this. This is just what they are right now. Okay. I think this is hold on. Okay. Long-term investments, Oracle's got nothing compared to anybody else. 2.1 billion. Here's the big difference. Oracle's saddled with 82 billion in debt with a total liquidity position of under $15 billion on the balance sheet. They're at a net liquidity position of negative $69 billion. Meta, net liquidity of 40 billion. Amazon, 56 billion. Microsoft, 76 billion. And Alphabet, 140 billion. So while these companies are funding their CapEx expansion from their cash from operations and putting up a tremendous amount of free cash flow, Oracle is saddled with debt. Now, I'm not saying Oracle cannot pay it back. I'm not saying that they're in a bad position. But what I am saying is their cash from operations is not enough to allow them to grow organically without tapping the debt markets. What else did I put on here? So I put the free cash flow. Right now, Oracle is at negative 6 billion on free cash flow. I'm not crazy about that. They're going so heavy on it. Now, I'm not worried about them going away or hitting any real issues. But from a valuation standpoint, I don't like the numbers. I really don't. Why would I want a company that's doing 21 billion in cash from operations versus Meta, Amazon, Microsoft, and Alphabet all doing over 100 billion and all putting up positive free cash flow? The numbers don't make sense to me, and I just don't know what Oracle is planning on doing that's going to generate the ROI on this for the amount of debt that it is taking on. So we'll see. 82 billion in long-term debt is not something to sneeze at. This is why I think tomorrow is a critical day, because if we get a situation where Oracle's numbers change dramatically, we will see that bears come out once again. Oh, Oracle leveraged, not generating the free cash flow. EPS is dropping, whatever it is, to try to create the story about a bubble bursting. I don't see a bubble. I do see that one out of the big five is going heavily in debt while the others aren't. And the others could write a check from their balance sheet and eliminate 100% of their debt tomorrow because they're all in a positive net liquidity position. So we'll see. We will see. I'm a little worried on one hand for tomorrow. I'm a little anxious. And I think that we're going to be fine. But, man, it would be a double whammy if we don't get a rate cut and Oracle freaks everybody out. I could see a big retracement, We'll see what happens. Now, there was some news with JP Morgan today, which was interesting. So JP Morgan shares slipped significantly because they flagged 2026 expenses will be higher than investors had hoped for. So it matters because rising expenses plus rate cuts can put pressure on its net interest margins. I don't think this has anything to do with SoFi, and that's why I'm bringing this up. Everybody knows I'm big into SoFi, and I discussed it the other night. So if we're going to get fragile conditions from JP Morgan, it could have ripple effects into the rest of the financials, and we'll see. We'll see what happens. I mean, I don't think the two are correlated, and I do think that SoFi's in a much different position, but JP Morgan does not own the back end the way SoFi does. So keep in mind that they own Technesis, they own Galileo. SoFi's in a much different position. If SoFi gets hit, I am going to consider, and I have a very full position, not just full, very full. If they get hit, if the financial sector gets hit, I will take a look at things. So probably not going to happen, but we'll see. Now, on the other side, I've been saying energy is going to be interesting. I've been saying that we're going to need more energy, that all of the data centers, we're going to need to drill more oil to get the byproduct of natural gas. Exxon came out today and raised its earnings growth and production targets through 2030. They're now guiding about $25 billion in incremental savings by 2030, which is driven by Guyana and the Permian. They're also planning on cutting low carbon spending by a third, from $30 billion to $20 billion over 5 years. I think this is really interesting because I'm a shareholder in Exxon. I want to become a shareholder in Chevron. I've been doing a lot of research on Chevron. I'm probably 1,500 words in on a new article about them. 1,458 words in. Hopefully this will be out tomorrow. I'm going to finish it after the stream. And I think energy is going to have a turnaround next year. The big super majors of Exxon and Chevron have very low break evens compared to everybody else. They're buying back a ton of shares, growing the dividend, and we just need more energy. And they're the two best companies in the sector. So I think, and I'm not necessarily an upstream person. I like pipelines better because the take or pay contracts, the fixed fee contracts, and you don't have another choice. You have to move your volume through their systems. But in order for them to do good, Exxon and Chevron have to do good. Thank you so much for the super chat. Looking to start a position ITRI. Can I get your thoughts on the Stark macadamia cookie for dessert tonight with the raw milk? Love it. I have no idea what this company is. ITRI. Hold on. Let's take a quick look. Yeah, I've never heard of this company. $4.5 billion market cap. Does anybody know what this company does? All right, 2.4 billion revenue, 874 million gross profit, operating income 298 million. Operating income's growing. It's been operationally profit for past decade. Okay. Bigger EBITDA. How much interest? Not a lot of interest expenses. That makes me think I should probably share this, right? Makes me think the balance sheet is clean since there's not big interest expenses. Good amount of cash on the balance sheet. So 1.3 billion. What I say the market cap was like 4.3, 4.4. So 25% of the market cap is cash. Interesting. No long-term investments, 3.7 billion in assets. Okay. Not a lot of long-term debt. 787 million. They have more cash on hand than debt. I love that. Not a lot of shares outstanding. Love that. Whoa, 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 whoa. What the hell is the stock for share price? Oh, 96. Okay, I was going to say, I thought it was a different share price. Excuse me. But yeah, book value 36. I thought this stock price was like 20 bucks. So that's why I was saying that. All right. Let's look at the cash flow statement. I can live with the stock-based compensation being 23 million. That's not horrible at all. Cash from operations, good free cash flow, 120 million or so. All right. So debt issued 400. Sorry. Let's start over here again. I didn't have it all the way to the right. 325, 330 million free cash flow. That's good. No debt issued. No debt repaid. I guess I don't have anything coming up. No repurchases. Issuance of a little bit of common shares. Okay, that's probably for warrants and stuff. I don't hate it. I don't even know what this company does. Let's see what the hell they do. Financials get a pass. Smart energy and water solutions. Okay. Electric utilities, gas utilities, water utilities they serve. Get investor relations here anywhere? I'd like to see a slide deck. Let's see. All right. I don't hate it. I'm going to have to do more research on it. I definitely don't hate it. Communications, data management, grid. Okay. It's interesting, to say the least. I don't know. It's interesting. Financials are good. I don't hate it. What was the chart on this? It's down on the year. Big short interest. I don't know enough about it. I'm just trying Seeking Alpha to see if I can find the presentation. Oh, I did. I just found the presentation. Let me bring it up. All right. All right. Let's see what the hell they do. All right. So backlog 380. I wonder if Matty Money's ever heard of this company. All right, so down. So the revenue is expected to be down. Full year outlook. Outlook is trending down on the top end. Wow, that's pretty big EPS for them, huh? Yeah, why is revenue decreasing on this? I'm gonna have to look more into it. The last thing I want to see on this is where the analysts have this. So no EPS growth over the next 2 years. And I'm not going off of what one analyst is saying there. Not a lot of revenue growth either. I don't know what to tell you. This, I don't understand this sector as much, so I wouldn't be willing to, I can't say really anything. Sorry. I'm a little worried. I would have liked it if there was revenue growth and EPS growth, but the financials are good. I think it's an interesting sector, but the fact that there's not a lot of growth out there makes me worried, especially with a declining revenue. So, and Maddie Money is still not here. Go figure. Maddie Money. All right, Ethereum, let's get to it. I know a lot of people want to talk about it. We had a pretty good day today, everybody. So Ethereum is currently up, or was up 200 or so. BMNR went up $3.37. It went up almost 10% today. It is almost back at 40. Day range, it's finished around the high, got up to 39.79. So I am still in it, still excited. We got to bounce off the bottom, pretty hard bounce. So let me bring up this chart. We need to get Jason on here. But, I mean, it's funny. Everybody was crying, screaming about it going down and going down. This thing went down to 24 or so. And then it bounces. It's almost up $15 from where it was right before Thanksgiving. Thanksgiving was, what, 3 weeks ago? 2 weeks ago? It just goes to show you, and I said to everybody, I couldn't tell you what this is going to do. But, oh, Maddie's on a different channel right here. The Street Exchange. If you're not following the Street Exchange, please find it. Just follow it. Matt put together a really great leaderboard, not a leaderboard, but kind of like a TV guide for everybody. So it's pretty interesting. No, Maddie, I'm not talking. I'm just saying that you're still not on. That's all. That's all I'm saying. And no, I'm not really a fan of small caps at all. So tomorrow, I think we're going to get, oh man, I should have taken tomorrow off so I could have streamed the Fed, but you know what? Amit's taking off. He'll be on. He'll be streaming it, so we'll be in good hands. I really do think Powell's going to cut. And if he cuts, I think we get a Santa Claus rally. Look, I'm really excited for a lot of companies, but tomorrow's a big day. So I'm interested in what everybody else is thinking. Yeah, Tanner and I will be on tomorrow night, so we'll see what's happening. SU, never heard of SU. Heard of MU, I used to be in it. I'm going to run a poll. I want to run a poll, and I have a couple of videos pulled up. So Guy Adami today, and today I was very busy. I haven't seen anything. I think everybody knows my list by now. I really like Josh Brown. I like Guy Adami, Dan Nathan, Joe Terranova, Stephanie Link. Let's see what Guy Adami has to say, because he was talking about Oracle today. And he thinks the relief rally will continue. Let's see.
Percent chance we get a rate cut at tomorrow's Fed meeting, but what kind? We'll have to listen closely to Chair Powell's comments for clues on the future cuts and the balance sheet. Joining us now is fast money trader Guy Adami, co-founder of Risk Reversal Media. Guy,
hello,
good
John.
to see you. What are you listening for from Powell? Assuming, 90%, hey, that we get the cut.
Well, it's amazing, and thank you. Hello, Morgan. Hello, John. Thanks for having me, as always. It's amazing that at one point over the last 3 weeks, we got down to a 35% chance of a rate cut tomorrow, and I didn't know where that came from, but here we are at basically a certainty of it happening, and it will happen. What am I listening for? Is he going to pivot once again? You know what? Although the job market we're concerned about, inflation remains problematic, are we going to sort of get back to that inflation is a problem? Because if we get back to that type of language, I don't think the market's going to interpret that way. And I'll tell you, there's this old, for you sports fans out there, there are people that believe if they put their hat on differently or put it on inside out, they can somehow affect the outcome of a game. That's the same way the Fed affects the outcome of interest rates. They're going to cut rates tomorrow, but I'm still pretty convinced that the 10-year yield is going higher from here for a myriad of different reasons.
Yeah, sports fans and also, by the way, space enthusiasts, very similar in terms of some of those.
Is that a true thing, or are you just saying that to make me feel good?
No, it's a true thing.
Okay.
Okay, so let's move on, Guy, because in addition...
Maddie Money, you may have to come on and defend this. Space enthusiasts are wearing their hats inside out. They're doing the rally cap. Is that true, Matt? You guys wearing rally caps at the launches?
To the Fed tomorrow, we've got Oracle reporting. It's up 10% in the past week. It's down 21% this quarter. I know some of the folks that watch things like technicals are watching this very closely to see if it continue to recover here. What are you watching? I
think it will recover. I went back and listened to and read all the things that came out on September 10th when it announced that huge revenue deal, and the stock obviously traded at levels where, in my opinion, it should have never been, because they told us about the revenue. They didn't tell us about the earnings, and I was pretty convinced we'd back and fill in that gap at 255. I did not think it was going below 200, but I think the way the quarter sets up and the way the stock is trading, I think this relief rally that we're seeing is to continue, and I think you will see a bounce somewhere between that 250 and 255 level, and in a number of different ways, that's what makes sense. It should have never gotten to 3.25. It should have never gotten below 200, but I think sort of equilibrium for this name is probably around 255, and I think that's where we're headed.
Okay, I can live with that. So I don't know where Oracle's going to go tomorrow. I don't know what they're going to report. I think a lot has to do with the debt load. So I'm not going to make a prediction on that right now. I did see some comments about something I wrote today, so I am going to address it real quick. So I put out an article on Seeking Alpha on MPLX for Maddie saying that I am a fake oil and gas investor. He's 100% correct. I know nothing about the space. So I've been very bullish on MPLX for a while, and I downgraded to neutral. I think shares have topped out. Obviously, it looks like they may have. I think it still is interesting from a distribution play. Distributions are the oil and gas segments for MLPs. Same thing as a dividend. It's paying a 7.75% distribution / dividend. Now, the reason why I downgrade it is all about the valuation. When I look at the numbers on MPLX versus EPD, which is Enterprise Pride Partners, PAA, which is Plains All American, and ET, Energy Transfer, not a little alien calling home, ET. MPLX is trading at the highest price to operating cash and price to EBITDA. I don't care about the price of free cash flow because these companies are investing a lot of CapEx right now to meet the demand for data centers. Really high valuations compared to the rest of the segment. I mean, you can get Energy Transfer at under 4 times EBITDA and under 6 times price operating cash. And then when I look at the enterprise value, which includes the debt on to the market cap, to adjusted EBITDA, MPLX is the highest in the group. When I look at just the market cap to adjusted EBITDA, it's still the highest in the group. And when I look at the market cap to distributable cash flow, which is all the capital they can distribute to shareholders and use for organic projects, et cetera, they're the highest in the group. I think it's a phenomenal company, but I think that it's run too far, and I think that the shares need to take a breather. What do you mean I don't know about Hess Midstream? Of course I know about Hess Midstream. I own it in AMLP indirectly, Maddie. Come on now. I actually don't know what position it is in AMLP, but I'm pretty damn sure that's in the top 6. Is it? It's number 7, man. I knew it was in there somewhere middle of the pack. So I don't own it directly, I can tell you that. Hess Midstream's number 7. It's not number 6. I thought it was in the top 6. But yeah, I have it in AMLP. CVX, which is Chevron, acquired Hess. They did not acquire Hess Midstream. 2 different companies. Now, if Matty was on, he could explain the difference to us. But don't worry, Matt'll come on a different stream. He'll come on a different stream. Trump is still talking. I mean, that doesn't surprise me. I'm not going to switch to it. I've decided I'm just going to throw it into Gemini and get a transcript of it, and I'll read what he said. I do not own a flying bicycle, although that would be pretty cool. I'd rather have a flying car so I don't have to deal with traffic. And how about the Netflix Warner Brothers stuff, everybody? This is shaping up to be an interesting fight. We'll see what happens. So does anybody know what Service Titan is by any chance? I've never heard of this freaking company. TTAN, the $10 billion company. So let me share this real quick. Josh Brown just bought it. So I guess it IPO'd this time last year. It shot up to 131 and then came back down and shot up again. Piper Sandler praises after strong Q3 results. I don't even know what they do. Okay, double beat on EPS, beat on revenue is probably, small cap, small to mid 10 billion. Not a lot of EPS growth next year for a company that's that small. And gotta tell you, not impressive growth rates when you can get SoFi or Hood or any of those companies. So I have no idea why Josh Brown is buying it. Let's see what he says. I happen to like Josh Brown a lot. Maybe I can learn something. Maybe it's something that I pay attention to.
Start with some new moves by the committee, because it's not every day where we have many moves to get to in the show today. We'll lead with that. We'll lead with Josh Brown with a new buy. It is Service Titan. It is TTAN. Hasn't quite traded a year. Hasn't quite traded a year, almost. Why this?
So I watched it come public on the floor of the New York Stock Exchange with you, Judge. I don't know if you remember, but we made a joke on air that my landscaper should take a look at it because I think it would help him streamline his business. And shout to Frank, by the way. So the story here is that I watched it for a full year. I watched all its earnings reports. I tracked the price, and I looked at its fundamental progress. And I felt that now would be a good time to start a position. It's not quite at its highs. It did have a nice rally after reporting on December 4th. It's a really exciting business for me. I've done well in this space. I think about these vertical software companies that come to dominate a specific niche and almost become so entrenched and so ingrained in the workflows of that niche that they just become category killers. They become compounders. And ServiceTitan is at a very early stage of that. So it's going to be volatile. The company doesn't earn money yet. They're not attempting to. They're in crazy growth mode. And I think that, I mean, this is not even a stock. I don't even know if it's in the Russell 1000 yet. It's certainly not in any of the S&P indices because they haven't even been trading a year. But like, that's the opportunity, because managers that are pigeonholed into the S&P 500, they're not paying attention to this yet. Here's what's going on. Basically, roofers, gardeners, construction companies, this is both small and mid-sized business as well as commercial, exterminators. They need to bill their customers. They need to set appointments. They need to have their workflows be infused with AI to speed up workflow automation. They need these tools, and ServiceTitan is becoming the category killer for all of these different trades. The last earnings report, they beat on the top, they beat on the bottom. Revenue grew by 25%. They're expected to grow revenue by 20% as far as the eye can see. It's a subscription business, which is great. We love these ARR companies. Subscription revenue, $182.8 million. That was up 26% year over year. And gross margins, which are, I think, going to become the story, 80.2%, up 310 basis points per year. So the story is, the more of the trades they can make partnerships with and get their software into the technicians' hands in the field, the stickier this business will be. If it reminds you of Toast, which I talk about a lot, very similar concept, and nobody is better positioned to bring AI to the trades. The last thing here, their best customers are PE backed. It's important not to think about all these trades professions as being small and mid-sized businesses. There have been huge roll-ups created over the last few years by private equity. Those are the earliest adopters of this type of software, the stickiest customers. And not only does it help them with their profitability, it actually drives faster sales growth. And so that's why I think this is such a great way to play the AI trend through a specific vertical.
Let me ask you a quick question before we move on to other moves. It's up 4% year to date, and you pretty much have, almost a full year to judge the stock. Is there something that the market might be skeptical about? Is there competition in the space?
It's a full valuation.
I mean, what's the deal?
It's a great question. It's not cheap. It's about 10 times forward sales. So that is not what we would conventionally consider to be cheap for a software stock. I think if you look at the IGV names, they're probably more like between 6 and 8. But they're also growing much faster than most of the other publicly traded software companies, because this is like a brand new business and they're dominating it. The other thing is, they're not expected to reach GAAP profitability next year. So there are a lot of people who just would look at this and say, all right, I'll wait until they get earnings positive. People said that about a lot of the stocks that I'm involved with. Uber was non-profitable for 3 years when I was buying in the 20s, the 30s, the 40s. You have to believe that this company will know when it's time to focus less on sales growth, more on profitability.
Okay.
Right now, it's a land grab. And so, I think that's the opportunity. If they were already profitable at $10 billion market cap, this thing would be in the mid cap 400, and it would be more discovered.
Did I look at this wrong? ServiceTitan, aren't they profitable? Maybe that was the other company I was looking at. They're positive free cash flow, negative on net income. I'm not into it. It is what it is. Not into it. So what's everybody looking at? I need to do SMCI. I have a list of things I need to do. Haven't done them yet. Really busy day today. And the Fed is really the only thing on my mind at the moment. PayPal. Oof. PayPal. Where is PayPal? 60. Tremendous value. I can't do it again. I made some money on it, but I don't think anybody cares. And the last straw was starting a dividend program and not actually putting up a meaningful dividend. So did PayPal get downgraded? Really? Interesting. I see people saying STWD. I mean, I'm a big STWD fan. I'm a big Barry Sternlich fan. I think he's one of the best CEOs in the REIT space, if not the best CEO. Chels is loading up on Rocket Lab. I missed Rocket Lab. Maddie Money told me to get it. I didn't. I mean, look, this could be very true. Me saying I don't think anybody cares literally means it's the perfect time to buy because sentiment couldn't be any worse. Could be. Could be. Oh, take two. We're rolling the dice. I mean, what if GTA 6 doesn't come out next year? What if they don't come out? That is a 42 for Mariano Rivera and not Jackie Robinson. Half of these companies, everybody is saying, I don't know. Is Palantir really there right now? I guess I'm going to check on Robinhood. You guys are all saying that Palantir is shooting up. Oh, yeah, overnight it's up. Wow. Who knows? Dutch Bros. I've never gone there. I don't know. I know, once again, Maddie's a fan. I mean, look, ET is something I like. I did steal the Cookie Monsters cookies. I got hungry before I ended up looking at Energy Transfer. I'm a big fan of Energy Transfer. I don't know that we know that they're going to cut tomorrow. They may not cut. They may not cut. So the fact that Rivera is the only unanimous and Jeter was not unanimous is disgusting. The fact that one person voted no on Jeter is disgusting. Jeter should have been unanimous. You guys want me to call a Mitt to see what's happening with Palantir? I mean, everybody's saying it's a Navy deal. We're going to let him at rest. He wasn't feeling well. He powered through the streams. Let's see. It's not the Navy deal. Call Jay Powell doesn't want to talk to me. One person on Ichiro also. Yeah. Ichiro should have been unanimous. I mean, I got a thing that Bonds and Clemens should be in. That's just me. And it's a shame Mattingly's not getting in. It's really crazy. Stop it. David Wright is far better than Jeter. Stop it. How many rings does David Wright have? As part of 3,000 hit club? Tuesday Night Milk Gang, that's right. All right, I guess we'll see if he's available. I'm going to text him. I'm not going to call him. I'm going to see if he has 5 men. All right, we'll see if he's around. Oh, look at this guy. Sam, are you check your X. If you're around, come on for a little bit. Hold on. I didn't realize Sam was lurking in the chat. Yeah, that's why we texted Amit. We're not going to call him because I have no idea what he's doing. He streamed a ton today. He's probably passed out right now, so he wasn't feeling well. And plus, he needs to be fresh tomorrow to cover the rate cut. We have a guest, ladies and gentlemen. What do you mean I should give Amit a scarf next time I see him? What are you guys talking about? Why does Amit need a scarf? And I think our guest is having technical difficulties, so they'll be on, I guess, momentarily. Oh, that's right. GameStop reported. What did they do? All the TCG stuff. Down. Oh, that's not good. Collectible sales is up a little bit. Yeah, that's not good. Ryan Cohen needs to give me a call, is what he needs to do. I don't like that at all. I mean, if you guys want, I'll buy him in a scarf, but all right, let's bring him on. What's going on, Sam?
Hello, sir. How are you?
Good. How are you?
Am I lagging?
No, you're good.
Okay, wait, one sec. Okay, can you hear me?
We can hear you loud and clear.
Yeah, I apologize. I am not in front of any cameras or anything right now, just streaming from my phone, but good to see you again. Good to talk to you again, Steve. How are you?
I'm good. Yourself?
It's good.
So what do you think about
So what's
tomorrow?
going on?
You excited for a rate cut?
Oh my goodness. Well, obviously we have a 90% chance of a rate cut. It's going to happen. The question is, what's the commentary going to be? It's really tough to say. Like, are we going to get a dovish cut or are we going to get a hawkish cut? We're sitting over here near all-time highs, crazy bounce in the last couple of weeks. I don't know. I mean, I don't think it would be the worst thing in the world to have a hawkish rate cut, considering that there's only 2 rate cuts basically priced into the market for through the end of next year. And the next rate cut is actually priced in 50% chance in April. So if the next rate cut's in April, kind of explains the reason why the market's kind of stagnant right now, because they need like a dovish momentum. But I do think we're obviously going to get a rate cut for sure, but I don't know if the commentary is going to be what the market wants. But I also don't think that we're going to like drop 5% from here. It's just, we're just going to chill around for a little bit.
What do you think we're going to learn from Oracle tomorrow? Do you think that they're going to say that they are expanding their CapEx build out? And do you think their earnings are going to be good for IREN, Nebius, and CoreWeave?
Well, I mean, the $450 billion backlog that we saw, that insane backlog that we saw, the market just doesn't believe them. And you saw it because the price basically went down like 30% since then. And the credit spreads for Oracle and the debt for Oracle just got very cheap, which means that the market doesn't want the debt. So they're coming to these earnings. If they came to these earnings with Oracle trading below $200 still, maybe I might say like, okay, maybe it's probably going to go up, but it's already like, what is it at right now? Like 240? I haven't really checked what it's at. I think it's like 220, and those prices do matter coming to earnings, really depending on the bounce. But I mean, if I was gonna be an Oracle, or if I was gonna be long tech into this earnings, I don't think I'd play through Oracle. I think I'd play through either Nvidia or play through like one of the other stocks, right? So is it going to be through IREN? I don't know. Like, I got to be honest. IREN needs to recover that $55 level to get above the 50-day moving average again, because the chart it doesn't look good. It doesn't look good at all. Nebius may be more unfavorable. I mean, I've always been more bullish Nebius, but really, I think what it comes down to is, does the market believe them in whatever numbers they post for the backlog? And it's kind of a lose-lose situation, right? Like, if they post higher backlog, the market might be like, bull, because we didn't believe you the first time, I would believe you the second time. And if they post lower backlog, the market's gonna be like, see, we didn't believe you, right? I don't know if it's going to sell off. I don't know if it's going to be like a 30% up Oracle day. Larry Ellison is printing money left and right on yachts and everything with his with his Asian wife. It's, I don't know. I don't know if Oracle is the play anymore. I think that was the play, going from $120 to 330 in a matter of a few months. I don't know if it's the play anymore. I think the play is Nvidia. Look at Nvidia now. They're going to reaccelerate revenue. They've already guided for a reacceleration revenue up to like upwards of 60%, the high 60%. And on top of that, what happened to Palantir?
Yeah, everybody was saying that there's some type of army deal or something.
Wow, they're up 6% overnight. It's insane. I don't know. I don't think the play is Oracle. And actually, somebody messaged me. It was like, what should I do with Oracle? Because the last earnings that he had, he made like 30 grand off of it. And I wasn't even doing anything with it. But, he took what I said on Amit's stream to heart, and he kept his calls, which good for him. He made money, right? But it's just Oracle, they're an expensive company with a lot of debt. And that debt is financing all of the backlog they're going to be building. This isn't like an IREN or a Nebius where, they're raising capital and they're going to be building a lot of infrastructure, and they're going to have like 2 billion, 3, 4, 5 billion ARR by next year. This is Oracle, where it's already priced in. I feel like it's already priced in. I mean, mind you, it could go up. I don't know, but like, this isn't really what I'd be looking at if I was playing it.
Oh, I agree. And for everybody who is here, I've had Sam's YouTube channel up on the screen for a little bit. Please go follow him. He puts out great content.
Appreciate it, man.
The Solid Finance. So to piggyback off of what you were saying, I had showed a spreadsheet earlier where I went through the net liquidity positions. And when you look at the hyperscalers, Oracle, if you want to consider them a hyperscaler, Meta, Amazon, Microsoft, Alphabet, Oracle is in a net negative liquidity position with negative 69 billion on the balance sheet. So they have 11 billion in cash on hand between cash and short-term investments, 2.1 billion in long-term investments, with 82.2 billion in long-term debt. And then you look at the other hyperscalers. Alphabet has net liquidity of 140 billion, Microsoft 77 billion, Amazon 56 billion, and Meta 40 billion. And the four of them are all positive free cash flow, where Oracle is negative 6 billion free cash flow. So I'm really worried that tomorrow we get into a situation where Oracle's debt expands because throughout Q3, they tapped the debt market. Their free cash flow retraces a bit more because of the amount they're pumping into CapEx. And I think the AI bears could get ignited off of that, which I would take as an opportunity if Nvidia retraces from here. But long term, I think you're right. Nvidia to me is the play. They're so inexpensive for the revenue and EPS growth that they have in front of them. And the fact that they are a $4 trillion company doing 63% year-over-year growth in revenue is something we've never seen before.
Yeah, I mean, for me personally, I don't own Nvidia. You already know that. I've ventured into other smaller mid-cap stocks that are part of this chip fabrication and chip supply chain, right? Like I have a position in Amcor, which a lot of people already know about. I mentioned On Semiconductor, which is very critical, developing power chips for the EVs, not specifically Tesla, but for a lot of the major OEMs that are in the US, also the importers as well. We don't know if Toyota is a client of them, but we're seeing a lot of upside in terms of the EV sales in EU, which will transition to the US once we get those lower rates so people can start financing cars and buying new cars. And it really is EV at this time, right? Like electronic vehicles is going to be the future when it comes to cars. And I think it's only going to get a lot stronger. So you have On Semiconductor, which is more geared toward power chips for a lot of EVs, and versus ICE vehicles, they do have computers in them now, but not as many as EVs. And if that EV demand grows, a lot of companies, including Tesla, are going to be accelerating revenue from that. It's crazy that sounds, right? Tesla's going to accelerate revenue. But the biggest beneficiaries are the onshoring semiconductor fabrication and supply chain logistics companies. That includes Amcor, which is the packaging US pick for TSM and Apple. And it also includes On Semiconductor, which is the power chip as far as that entire supply chain goes for EVs. On top of that, On Semiconductor also has Nvidia as their client for the 800 VDC data center servers, as far as powering that specific power that's needed for these AI servers with their virtual GAN technology, which is one of the first in this industry, and they're able to capitalize on it. And they're already profitable, right? Like you have a lot of people know what Navitas is. Navitas is, of course, also in the power chip sector, but they're not profitable, right? Their financials are not as favorable in this current market condition, and neither is Wolfspeed, which are the biggest competitors. SiTime is a competitor, but SiTime is mostly based in the EU, so they will not be able to benefit off of the CHIPS Act, in which On Semiconductor can benefit for that. They're building a new plant in New Hampshire, and they have a lot of presence in the US. Like, there's also another company, Skywater Technology, which is mostly tied with automating fabrication chips for a lot of the onshoring suppliers and logistics systems. That's something I'm looking at right now. Has ran quite a bit lately, but this is like the theme that I'm kind of looking at, right? I think it's still in the picks and shovel stage. I think software is a little bit debatable as far as upside from here, but I do think there's still a lot of good opportunities in the market, especially with companies that are already profitable. And I don't want to touch too much on other things, but like I'm still focusing on semiconductors. I don't think the play is Oracle. I think, of course, it's Nvidia, who's always going to be winning in AI, but I think it's going to be these other proxy players that are included in the supply chain for the US.
I'm still shocked you're not in Nvidia.
Well, why? I mean, Nvidia is up like double, right? But a lot of the positions I have are the options were cheap. They've gone up like 1 or 2, 3 times. Like, I don't need to be Nvidia, but Nvidia has to go for these stocks to go up.
I'm just surprised because you followed this stuff so closely. I'm just surprised you don't have a position in it. That's all.
Yeah, I mean, I used to own Nvidia. I bought it around $500 pre-split, and I really like sold it and trimmed it hard, like around 130, 140 post-split. And when it pulled back to like $89, like there were so many other plays that were out there that were direct beneficiaries of Nvidia's comeback, right? Especially from the April lows. Like everything came back from the April lows, but if you look at companies like Astera Labs that basically went from $60 all the way to $260, I didn't sell the top, but I sold near the top. And also, if you look at Micron, went from like $120 and it didn't even start rallying until like later on in the summer, right? That was also a good opportunity too. Like there's like some opportunities in the market where it's like you don't have to be in Nvidia in order to make a lot of money. And for me, like the goal is to really make a lot of money in a short period of time versus like long-term holding, which is where I had been in the past. But the way the market is today, and I feel like everyone has to, I mean, I don't know. It really depends. Like, buy and hold, whatever, it still works. But if you're going to be looking for like outsized market returns, you have to conform to the way the market's trading. And right now the market isn't like an everything rally. It's very decisive with what it's going to buy right now. And it's not Amazon, unfortunately. I don't know why it's not Amazon. It's not Meta anymore. It was for a minute. It's not Nvidia. Maybe it's Tesla, maybe not. Maybe it's Apple, maybe it's not. It's not Microsoft, it's not Netflix. Google was for a minute. Like it's just the market is not looking at it's not looking at the Magnificent Seven anymore. It's pretty much looking at the S&P 493, which is what Ed Yardini says in a lot of his research. It kind of makes sense. Do we need the market to go up 25% next year for a lot of these small and mid caps to do like a 2 or 3 times? No, you don't even need the market to go up 10%. Right? The market has only went up 5%, not even 5%, like 3%, 4%, and since the lows in November. But like, look at these other companies. Look at Amcor, went from $30 all the way to $44. Look at On Semiconductor, went from 45 to 55. Right? It's like these other companies have made massive moves, and those were the dips that were bought tremendously. And if you look at the speculative, no revenue companies, they haven't really recovered. So it kind of makes you wonder, like, what is the market favoring right now?
Yeah, and 2026 could be a lot of things, but we really could see a broader market rally as productivity gains occur through software enhancements with AI and even robotics and manufacturing. So I wouldn't be surprised if we get some type of broad market rally next year. At the same time, I do think the big companies are just going to get bigger because it's very hard to compete with them. So we'll see. I mean, I'm getting more and more interested in Nebius, CoreWeave, and Iron only because I'm seeing so much demand for the data centers that I think that they're going to be a good long-term hold. I'm looking for the entry points right now.
Yeah, I mean, one thing to keep the remind about with CoreWeave is that their debt is very cheap at this point, and institutions will buy their debt no matter what. The thing is that there won't be as much demand for it, and you've seen it really in the credit spreads that they have for their debt. Like it's like Oracle, right? And that's one of the reasons why I went from like $130 all the way down to like $60 after earnings, because there was that fear. I mean, you look at Nebius, yes, they're raising debt, Iron's raising debt and everything, but their debt has been oversubscribed whenever they've issued them to the market. So it's always a good thing to see, right? Like I would think I think CoreWeave is going to be fine. Like I don't think that CoreWeave is going to zero or anything. Like their biggest clients are OpenAI and Microsoft, and they will continue to buy their compute or rent out their GPUs, whatever it is. They will continue to do that. Nvidia has invested interest in them as well. Like they're not like if CoreWeave goes to zero, I would really worry about Nvidia at that point, right? Like Jensen Huang's or Nvidia's venture portfolio is like 90% CoreWeave. They're not going to let it happen, right? So I think CoreWeave is going to be just fine. But I think as far as like potential upside and runway, I think Nebius and Iron are really those two ones that I own. So maybe I'm biased, but I think those are the two ones. Did you look at Nebius? They just purchased a lot of land in the Midwest recently.
No, I have not, but it's interesting. Tom Lee put out his Fundstrat Granny Shots US Small Mid Cap ETF the other week. Nebius is the 10th largest holding. On Semiconductor is the 9th largest holding.
No way.
Yeah.
Wow.
I'm looking at it right
There we
now.
go.
I'm going to put it on
Before
the
the
screen.
herd.
So,
Dude, I'm telling you, On Semiconductor is one of my best picks for 2026. And it's still a really good value, in my opinion. I mean, it's not as cheap as when it was trading at $45, around an $18 billion valuation. I think it's closer to like $22 billion now. But they authorized a $6 billion buyback. They are buying back 1/4 of their market cap still. At the time, it was 1/3 of the market cap. But now it's 1/4 of the market cap. And on top of that, they are decelerating revenue. But I think next quarter that they're going to be reporting on, which is like around January or February, I don't know exactly when, it's going to be a decelerating quarter again, right? Like I totally expect that. But I think the quarter they're going to guide for after that is going to be an accelerated revenue. And I think that this will be a $70 stock by the time they report earnings next one. And if it's not, it will be after the earnings. I strongly believe that. This position is like over 10% of my portfolio, and almost half of it is in call options.
so the analyst community is not calling for a lot of growth next year, which is interesting on the top line. Now, bottom line EPS, they are. That's got to be from the buybacks you said they just implemented, because they're saying 5.5% revenue growth year over year, but 25% EPS growth. I'm going to look at the financials right now.
So it's tough to base an investment thesis on whatever is part of analyst estimates. Maybe not so much Seeking Alpha, but on the street, because you have to assume whatever the street is estimating is already priced into the market. Like that's the street, right?
Yeah, no,
Obviously,
the
Seeking
earnings
Alpha.
estimates I'm
Yeah.
looking at are from the street. Seeking Alpha aggregates
Yeah.
it. Yeah.
So if you look at their last earnings report, they actually guided for about, and this is far out, this is like 2028. They guided for about 10 to 12% revenue growth, right? And they're decelerating revenue right now. So if they reach that revenue growth, that means that they're going to get the premium that revenue accelerating companies do get, especially in the semiconductor industry. But also the fact that they're expanding profitability and their margins. Right now, their margins are okay. But the story, and similar to what Stock Talk says with Amcor, is the story is not the margins. The story is expanded revenue run rate and expanded revenue runway, not run rate, sorry. So if you have EV expansion across the US and across the entire world, you have rates coming down, people need to buy cars, they're going to be buying EVs as these EVs start to become more commoditized. As demand increases for EVs, you're going to start to get a lot more production. And the beneficiaries of the production for EVs are going to be On Semiconductor, Wolfspeed, and Navitas. But I don't want to sit in the speculative companies because they're not even profitable. I'd rather have profitable companies that I know will be able to survive, especially when the price is cheap on these companies right now. On Semiconductor trades it at a very attractive valuation for even a forward price to sales standpoint. But even if you do the estimates from 2028, they are very cheap right now, considering the market just still, they do kind of believe them, but they did not believe them a couple of weeks ago at all. But now they seem to believe them, and the chart looks really good too.
Yeah, they're actually trading at a really interesting price to free cash flow level, and the buybacks the
Hold
most
on, I
they've
can't hear
done
you.
in a
Did I just
single
lose
year.
you?
Can you hear me? Sam? Sam, can you hear me?
Is it me? Hold on. Can you hear me?
I can hear you. Can you hear me?
Yeah, I can't hear you at all. 1 second.
Anybody in the chat, can you hear me? Okay, they're saying they can hear us both. No, yeah, they're saying that we can't hear Sam.
It was me. My bad. It was me. It was me.
So I was saying that their valuation's very enticing, especially on a price to free cash flow level. And the fact that they're buying back more shares than ever in their history, I am going to do more research on it because at a 22 billion market cap and doing 1.2, 1.3 billion in free cash flow, it's very interesting.
Right. I know. And it was just an $18 billion market cap that's buying back 1/3. Sorry, $18 billion market cap producing that much free cash flow that is buying back 1/3 of its market cap. Like it made no sense to me why this was so cheap. And then I looked at the options chain and I was just like, people are really buying up these calls right now. Like if you look at the options chain, there is very high open interest on a lot of the higher strikes out there. So I can't tell you if that changed in the last couple of weeks, but when I looked at it, I just felt like institution was really in the stock and they're setting up for it. And it's just no surprise that the stock is up like 15, 20% in the last couple of weeks.
Which chain
It's
were you looking at? Because I have it up on the screen for everybody.
okay. So let me bring it up real quick because I forgot exactly which one. Hold on.
I mean,
So
I'm looking at next
I
week. Next week's got a ton of open interest.
well, I don't own next week. Hold on. Where was the options chain? I think it was June.
June 18th, 2026.
No, I'm trying to look to where I saw the high opening. Okay, here we go. So January 2026, which is obviously very close. Look at the strikes. They're like in $3, $4, $5,000 range.
Which
Obviously the puts.
which January date? Because they have it for every week.
Oh, January 16. So a couple of weeks ago, you really would not be able to buy the weeklies in January. You'd only be able to buy the monthlies because they're not usually released that far out. So if you look at the options chain for the monthlies, which is January 2026, those open interest and those call options are very high. Now, the put options are obviously going to be very high because institutions like to hedge their position, or maybe they're even selling puts, who knows, or they're writing puts, whatever it is. But if you look at the option chains for the weeklies, you look at the option chains for December 9th, the monthlies aren't even that high. Like January 16 is excessively high for this stock, like very high, right? Like that's positioning right there. That is institutional positioning itself for a lot of upside. I haven't checked April. April's okay, but January 2026 is very high for this stock. Like with everything, the stars align when this happened. The stars align. I was like pounding the table on this back then. Now people are starting to listen. Like, I mean, it's cool. Like, I still think that stock is cheap, but it's like, dude, this is what I'm looking for. I'm looking for these opportunities because this is what's going to give you those gains in the market.
It's interesting. I got to do a little bit more research. I would actually think about some spreads on this because, I mean, the 70-75 spread, if these numbers hold up, you're paying $4 a contract, which is insane because the last price on the 70 is 23 cents per share, and the last price on the 75 is 19 cents per share.
Yeah, I mean, I got to continue to take a look at it. I haven't added to it lately, but if we get a pullback to the 20-day moving average on S&P 500, I think we're going to get some opportunity in the market. I'm probably going to add to this position, probably going to add to Zeta, probably going to add to Path, just like kind of concentrate what I have in my portfolio. But I mean, I don't know. I'm not trying to press the gas toward the end of the year. Like, I just feel like this year is kind of over, in my opinion, for a lot of stocks out there. And I feel like a lot of institution, when I say feel, I mean, like, I don't know. I don't know. But it just seems like it from a sentiment perspective, especially considering that the NAIM exposure index for fund managers, they're basically almost 100% allocated or 100% net long as of last Wednesday, that they're positioned already, right? And if you have everyone positioned for the market to go up, Is it going to keep going up? I don't know. Like, I feel like you need to have a pullback in order to make the thrust higher. But I mean, obviously, Steve, this is like very short term stuff that like you probably don't really care about, and it's probably not going to be relevant too much to your audience. But I'm still bullish on semiconductor for 2026. I'm still bullish Amcor, still bullish Zeta, still bullish Path. I think those are like my best picks for next year. Amazon's valuation just makes absolutely no sense to me at this point. I don't, if the market doesn't love it, there's really nothing they can do about it, right? The market's not going to bid it up. Obviously, Meta's valuation doesn't make sense, but like, the market just does not like mega caps right now. It's like it's not a fan of mega caps right now. So I'll still own the shares, but like the calls and everything that I had before, like I trimmed a lot of them in the last couple of trading days. Pretty glad I trimmed Meta calls. Like I had the bottom, like when Chris Patel got into it, Chris like went hard on Meta calls when it was sub 600, and I was very like stubborn with it. Like I didn't really react to it until Meta was like $627, and then that's when I got into the calls pretty late. But like it not late, not too late though, because I still caught some upside. It was crazy because there's actually this indicator that I look at from Prospero, which like Meta net option sentiment went to like 100 out of nowhere because I looked at it in the morning, I looked at it in the mid-afternoon, and it was like at 100, which means that a lot of people were buying Meta calls. And I bought Meta calls that expired in a couple of weeks. And then you saw that news last week with Meta that they were reducing or planning to reduce the spend by 30% on the metaverse. And then the stock was up like 10-12% pre-market. It was only up 8% at the end of the day, but it was like, holy crap. Like it was just it was like, whoa. And then look at Meta today. Like, what in the world happened? Like, what happened?
Well,
That news
Meta's
didn't get
still
undone.
very undervalued right now.
I mean, it is undervalued with respect to its historical valuation, but compared to the other Max 7, yeah, it's pretty undervalued. So is Amazon too. And Nvidia obviously is too. I mean, you can't really argue with Tesla's valuation. I feel like anyone who invests in Tesla for the valuation is just I don't think anyone is investing in Tesla for the valuation. Like that's just I don't know how anyone can project that model. Whatever. It's like Tesla is just an investment in the future. It's a call option in the future, right? Tesla's going to be like a $5 trillion market cap at some point. We just don't know when. I feel like that is the investment thesis for Tesla, but for Apple is like I feel like this smartphone comeback might make its play next year, but I'm not really investing in Apple. But I do think that a lot of mega caps are just undervalued. I do think that Google is not necessarily expensive today. Like it's just maybe the market doesn't want it because it just doubled basically in a couple of months. But mega caps just are not in favor right now.
Yeah, and you're right about Amazon, but Amazon's not a short-term play. I mean, look, it's a low-margin business. They're at 11.2% operating income. The play on Amazon is long position with the idea that
e-commerce is a low margin business.
well,
AWS is a
but the whole
35%
business it
operating
makes the
income
whole
business.
business a low margin business because of how much revenue the e-commerce does. So AWS
no, for
is
sure.
absolutely high margin.
Amazon is absolutely the largest fish in my portfolio. The thing is that I'm not trying to press calls right now. I do have some swings on there, which I'm probably going to get stopped out tomorrow. But Amazon is just notoriously the best company in the whole world. Like Amazon is the greatest company in the whole world. They have their arms and everything. They're basically on multiple verticals around the entire world. They are literally around the entire world. They have the capital to be able to throw darts at the wall and see whatever sticks, which is how AWS worked in the first place. And that's how Amazon Prime ads are actually working too. It's remarkable. Like their two fastest growing businesses are their highest margin businesses. And we saw reacceleration in AWS. We're going to continue to see reacceleration in Amazon Prime ads or Amazon ads, which is, I think that's like they don't report on their margins for Amazon ads anymore. They used to, but that's a very high margin business. Of course, if you look at the comps for all the other advertising companies, Amazon in my opinion, it's just the greatest company in the world. I don't think they're going to go anywhere. I think it's going to consistently be one of the largest companies in the world. Maybe not today, but I think it'll always be up there all the time. And I have no problem making this 15 and 20% portfolio.
Yeah, I mean, the way that I'm looking at Amazon right now is I'm still a buyer, and it's a long-term play on 2029. 2029, they're expected to be the first trillion-dollar revenue company. I think that news cycle is going to break headlines and break
That's going to happen
brains.
before 2029.
I don't know if it is or not. I don't know. I mean, they're not going
Aren't
to
they at
break
like
700 billion this
600,
year.
700 billion?
They're
Let's see
this
here.
year they're
'Cause-
at, and maybe they will. They're at 691 right now. Maybe they hit 700. They still got to do 300 billion more, and that's not going to happen in 27 or 28 likely.
Okay, you're right. I mean, but
Because
it doesn't matter
think
because
about it, they
that's
went from
mostly in e-commerce.
574 to 637,
Yeah.
and then right now 637 is 691. They're not accelerating at
Yeah.
100 billion a year. So at this trajectory, 2029 is the year that they hit a trillion revenue. The news cycle will go crazy, and that's 4 years from now. And I got to think that in 4
Yeah.
years, Amazon will be able to expand their overall margin from all three combined business segments from 11.2 to between 18 and 20% through robotics and AI. And if they can
Yep.
do that, that
I
means that
agree.
they're at 180 to 200 billion operating income, which is significantly more than any company today. And right now, you have companies trading between 4 and 5 trillion. Some hit 5 trillion for a minute, and Amazon's market cap is only 2.5 trillion. So when I think about where they
Yeah.
can be in 4 years from operating income, where their market cap is, and where we've seen market caps from Microsoft, Nvidia, and Apple, I think that Amazon could be a $7 trillion company in 2029. And
Yeah.
this is a trip. This could be a triple.
No, I agree too. Just the timing is super important for me when I'm pricing with options. So like I'll stay in shares for now, maybe like a little bit of a swing position, but dude, I mean, it's just this is easily a $300 stock in 2026 if the market stays bullish. But that's the question: is the market going to stay bullish? Because I don't think it's going to get there without mega caps being in favor. And right now, it does not look like mega caps are the 2026. I think 2026 is going to be the SP 493. So the timing matters for strategic and tactical plays like options, but like owning the stock has just never been a problem for me. I mean, it's getting Amazon to $160 required the market to be down 23% intraday. That's what it took to get Amazon down $160, right? Like the fact that we're at all-time highs and it's still flat on the year, basically, or maybe like up like 2 or 3% in the year, underperforming the SP 500, just it makes no sense to me, other than the fact that the market is afraid we're going to have a recession. And in a recession, the first thing that gets hit is consumer, right? You saw the jobs data today was terrible. You see the you see the ADP private payrolls data is terrible. We're basically trading at, or not trading, we're basically at macro data that with jobs data that's like really near recessionary levels. We're being propped up by a K-shaped economy where the rich people are accounting for about 40% plus of GDP. And Amazon is the beneficiary of that, but how long is it going to hold for? Like, it is really a precarious moment in the markets where it's like, it looks bad on the outside, but the market keeps going up, right? It's like it used to be the market is a forward-looking indicator of the economy, but lately that has not been the case, right? Like I don't know who you know, but I have a lot of people who are not necessarily in the affluent space in my circle, and they're not like hurting, but they're not like crazy spending money left and right, right? And then I also know people who are affluent who are in the upper income level, and they're just like going to vacations, they're buying stuff, like they don't even care right now because all their money's in stocks, all their money's in real estate, and they're making money hand over fist. So it's like, dude, like it's you need, it's I don't know, it's like a double-edged sword with the Fed. Like you need to cut rates to help out the lower class and the lower middle class, but then the people who are really going to benefit from that is the upper class. So it's like, I don't know, it's very, I guess I focus too much on the macro certain times, but I think saves my ass on a lot of things, right? And that comes from like, what did I make money off of in the last couple of weeks? And that was a lot of call options. And now it's like, I'm not trying to press it right now. I'm really not. But from a long-term perspective, Amazon is just an amazing company that'll swim through any recession we have, which is going to be inevitable. And then I think that the companies that I'm also invested in, like Zeta, Amcor, On Semiconductor, and so on, like I think those companies will survive any recession too. But without a doubt, the marketing stuff is going to get hit in a recession, like hit hard, right? So if you have Zeta trading at 19 something right now, if we have a recession in 2026, like this company is going to be like 30%, 40% down from here.
Right now, I am most worried about the unemployment data. It scares the shit out of me. We're at 4.4%.
Which we're not going to get.
What do you mean we're not going to get it?
We're not going to get any major jobs data, any major inflation data until January. The unemployment data, I think we're supposed to get that next week, right? That's for November.
We're
Actually,
supposed
no,
to
you're
get it
right.
next week for November.
Yeah, I'm a little concerned about that one.
And
I'm not concerned about the unemployment rate, though.
About unemployment over the next 3 to 6 months, because while 4.4% historically is not a bad level, when we were at 3.4%, it shot up 1 percentage point. The trajectory is not good. Whenever we've gone up 1%, no matter what level we've been at, we've either started or been in a recession. And we may find ourselves in a position where second half of 2026, we're in a recession. Now, the Fed needs to take rates lower, and I'm a firm believer in we need to stop with the whole dual mandate trying to walk a thin line, and that we need to have rates lower so we can allow smaller businesses to either refi debt at lower levels so it doesn't destroy their margins, allow them to tap the debt markets to expand, and also incentivize entrepreneurship, because the amount of layoffs we're getting from large caps because of productivity gains is starting to get pretty scary. And there's no other alternative than creating more jobs in the other segments of the economy.
Yeah, I mean, I agree. I mean, you're preaching to the choir. I work for a tech company, and we laid off 2/3 of our staff in the last couple of years. And I'm not gonna lie, this is a pretty scary moment for me. I work in engineering. I work in not IT anymore. I work in engineering now, but I'm basically a developer for back end stuff. And I am like one of the few that are still working here. And I guess I'm lucky. But our company's pretty much done cutting weight. But I know a lot of people in the industry that it's just, you get too comfortable, you're done, right? Like, it's just like, if you don't learn how to use AI, not from a chatbot perspective, but also from an application perspective too, like, you're done. It's just, you won't be able to be as efficient if you don't learn how to use it. And I don't think we're at the point yet where it's like, where everyone's going to lose their job if they don't accommodate to AI, but like white collars feeling it. Like, we're all feeling it, right? But like, nothing to be scared about, because I feel like the population we talk to, or the audience we talk to, understands it. But there's a lot of people out there who've gotten very comfortable with their job, who've been comfortable for 4 or 5 years, who continue to think that they're comfortable, and the next thing you know, they get laid off because it's like your minimal, roll through the weeds production effort is just not going to cut anymore. Like, you need to pull your weight. And in the mega caps, they see that. They're like, why do we need to have a staff of engineers of like 20 people in each team when we could have 10 engineers use AI to have a productivity of 30, right? And that's becoming a real thing. And I think that's very important to have as far as like weeding out dead weight in order to keep GDP high. The problem is that you have this major influx of people looking in the job market for the same job that 10 people are trying to apply for in the matter of a day. It becomes very tough. And then work becomes an abundance or an oversupply. And then that's going to contribute to issues with unemployment. And this is the reason why I'm not really too worried about unemployment, because unemployment is more of a survey. But the the ADP non-farm payroll is more important because that's actual data. That is tangible data that is taken from their database. If that comes down dramatically, that is going to be the one that brings down things. And I don't mean to be, someone commented I'm a downer. Like, I'm not a downer. I'm just being realistic, right? So it's not balls to the wall calls every single week. It's not pre-revenue companies going up every single day. Like, we need to understand what we're investing in. We need to know what we're investing in. We need to understand that the markets go every single day because we've been conditioned to realize this or think about this for the last few years, with the market being up 25, and then 16% year to date today, that markets don't go up all the time. They don't. And guys, don't forget, 2022 was a crazy year for growth stocks. Like, people got decimated, right? And we might have had a major comeback in the last couple of years, but we need to understand that you need to stay invested in companies that are profitable today, companies that will weather any recession, because it's inevitable. There will be a recession. Whether you like it or not, there will be a recession. It happens every 10 years. And I would say, was 2020 a recession? I think it was a recession, but I think that it was just propped up by Fed liquidity injection. Also, on top of that, it was more of a manufactured recession. But like, I don't know, man. It seems a bit unfair in the markets right now with just how it's all propped up in favor of the upper class. And I think there needs to be a balance. But unfortunately, you can't have that balance without hurting the upper income, without hurting the markets and everything. Like, I don't know, man. It's just, I have a lot of people who are first generation in my circle. Like, I'm half Filipino. I have a lot of family that are Filipino. Like, it's just that a lot of them are like doing okay, but it's like they feel the heat from the economy. And I look at the stock market, I'm just like, what in the world? This like doesn't make any sense. You know, it's a bit unfair, in my opinion. It's a bit unfair for people who are lower to lower middle class, even like middle class. I don't know, man. I guess I'm getting a little emotional at this point, but it is a bit unfair what I see happen right now. And I think we need to have like some sort of dramatic pullback or prolonged pullback in order for things to kind of balance out a little bit for the market to continue going up.
Not going to happen. It's
Well,
just
not
not
with
going to
this
happen.
administration. That's for damn sure.
The
Yeah.
market's not expensive by any stretch of the mind. You have
On a
Nvidia.
historical basis, it's not expensive. On a historical basis, it's not expensive.
It's not,
Okay, so
historical
the
basis is not
S&P generally.
expensive, especially with the forward earnings growth that's occurring. And we may see a situation where we get a broad market rally while the Mag 7 continue to expand and take the market up 15, 20% next year. That could really happen. Like, the smaller cap companies, nobody gives a shit about in the grand scheme of things. Like, Aklo, nobody cares. That doesn't matter. Like, that doesn't matter to the market.
That's the problem, dude. Like, everyone here is smart, right? We're all invested in stocks. We put a lot of our net worth in stocks and multi-variable assets, and we diversify. Like, we're all smart, right? But we are literally like not even 10%, actually maybe like 15% of the population, right? Everyone here is like the upper 15% of the population in terms of the way that we think, right? Like, we know that we are burning money if we keep it in cash. Like, you are literally burning money every single year. But the other 85% is not doing so great.
Yeah, look, listen, there's always going to be, I think Sam dropped. We'll see if he can come back. While we're waiting for Sam to come back, thank you, Jam Beck. Appreciate it. I'm actually in Corning, not a big position, but I bought it for the dividend a while ago and I caught the run. So thank you. I got to look more into them. I haven't looked at them in a while. Diego, thank you for the super chat. At what point do you start realizing we are screwed and going into recession January, March, May? I do think that we may be finding out that we are in a recession at some point if unemployment keeps going up. I don't know that we're there yet, but right now, if the Fed does not cut, I think that is a very bad road to go down. And the worst thing that can happen tomorrow is a hawkish pause, because that'll send things in disarray. The market is already priced in a rate cut. And the most important thing is we need to unlock the housing market. The housing market is still, interest rates are too expensive on the 30-year. Most people are not moving. They're not refinancing. They are not taking home equity lines to do the roof, windows, et cetera, et cetera. We need the trades to have more work. You need lower cost of capital for the home builders to build more. We are undersupplied. And most importantly, we need the small companies, we need middle markets, and we need entrepreneurs to expand. And you can't do that in a high rate environment. And when you take out debt at low levels, where we had the rates in 2020 and 2021, corporate debt rolls on 5 and 10-year bases. The problem is when you're taking debt out and the rates are at 1%, which means your business loan is 4 or 5%, and now rates are 3.5 to 4%, you have to refi at 8, 9. That compresses your margins, and a lot of times that creates layoffs, which is not good for the economy. The Fed cannot get rates down quick enough. They really should just leave them at 2.5% and not tinker with them unless we absolutely have to. Because I sure as hell don't know, and I don't think anybody knows, what the long-term implications of AI and robotics are. And if you really start extrapolating that out, at some point, full self-driving is going to be here. Now, driving through New York City the other day, there's no way in hell full self-driving is happening in New York City anytime soon. But eventually, we're going to have it. And that's going to really hurt the delivery market, transportation market. You're going to have robotics. Companies are going to look at robotics as lower workman's comp claims for warehouses. There's a lot of productivity gains in it, no calling out sick, et cetera, et cetera. So if we don't have an economy where the cost of capital is cheap to start new businesses, I think we're in for a rude awakening. So I am hoping that scenario does not play out, but we're going to see. And we have Sam back.
And my bad. I got cut off there. Wi-Fi. Yeah, man. I mean, I don't mean to be a Debbie Downer, but I mean, I am living in reality, and investments go up and down, and just know what you own and make sure. I mean, always make sure that you're invested in things that will be able to weather recession, and always prepared for the inevitable recession. I mean, I don't think it's going to happen, or I don't think a pullback's going to happen now. But when it does, when we pull back below the 50-day moving average, that's 3,500, then be careful, right? We've seen that many times, but I don't think that's going to happen now. I really don't think it's going to happen now. I don't think it's tough to say. Like, Germany went through a technical recession and they were at all-time highs. Like, it's really tough to say how the market's going to react from an actual recession, because it's weird. Like, you go through a recession and then the Fed injects liquidity into the system and the market goes up, right? Like, it's just, I don't know if we're in a stock market where we're going to have prolonged bear markets, right?
Well,
unless
think
we're
about
in a rate hike phase.
Yeah, so think about this. You had Q3 earnings. Most companies beat. Most companies raise guidance. The biggest companies in the market all beat and rose. So it's going to be very hard to knock this stuff down when Q4 earnings start again second week in January, which is at this point right around the corner, 5 weeks away. So it's going to be hard to knock this down right now. And then if we get an environment where we do get lower rates, we may see earnings continue to expand regardless of what actually happens on Main Street. So this could continue to be the tale of two economies. We'll see. I'm not sure if Sam got cut off again or not. Yeah, I think we all appreciate his perspective. Sam's a pretty level-headed guy. Let's see. If we go into recession, then other parts of the world are going into a depression. I mean, I can't give you a crystal ball on that. What happens to Palantir? I mean, you guys know how I feel about Palantir. I ran the numbers the other night. So I'm a shareholder, but I think it's overvalued. Oh, I don't follow AutoZone. Warner Brothers price target. I don't know. As a shareholder, I think we should just take the $30 deal from Paramount and be on our way. That's how I would vote, but I don't have nearly enough shares to make a difference. So, but I would rather look from all reasons. I don't think Netflix can get a deal done. I think becomes an antitrust issue. They'll have so many more subscribers than everybody else. I don't think it gets done. Sam, you back?
I am back. My kids are everywhere right now.
Yeah, no worries.
Give me a minute here. This was not a planned stream for me. Just showing up. I didn't mean to steal the show or anything.
Yeah,
Apologize.
no,
One
you're
sec.
good. You're good. I actually have no idea what part of my portfolio is fixed income. I've never looked. I do not own Nubank. I do not own DLoco, but I own SoFi. That's all I can say. I can't tell you stick with this, stick with that. I can just tell you what I own. Let's see. Pray to Lord Powell, everyone. Powell better not come out hawkish tomorrow. He's going to. Hawkish cut.
Now, you know, that guy in the audience is right. I'm going to spend some time with family because I was still out doing some stuff, but I'm back home,
Yeah.
Steve.
Great to have you
Gonna-
on, and we'll schedule something for
Yeah,
the two of us.
dude. Honestly, I really appreciate hearing your mindset. You're very level-headed. I really like your analyst projections when it comes to a lot of stocks. And it was great. I still remember when Nvidia was like at 115, 110. You were like, I'm a buyer in Nvidia. And it was like, wow, you're gonna buy all the way up here? And it's at $180 right now. It's like, what are those people saying now, right? It's just they really matter at some point, right? Especially with like a long-term mindset. That's why it's like I sound very short to medium term right now. And honestly, if you're like very long-term mindset, like just everything I say, just ignore. Like, I'm sorry. Like, I don't want to be like somewhere it's like, oh, Sam's bear said that. Well, I mean, I'm trying to produce a certain type of alpha that is not really subjective to people who are much more long-term perspective, like Steve, right? Steve is not going to trade short. Well, I don't want to speak for you.
I'm not going to trade short-term options.
Yeah, like you're okay. Good. There you go. So you're not going to trade short-term options. I will, right? And that short-term matters to me. But if you just focus on what you own for the long-term perspective, like this is all literally noise. It's just all noise. But yeah, appreciate talking to you, Steve. Just want to like say to the audience, like I appreciate you shouting on my channel, but I do have a series that I'm doing on the Wolf Financial podcast called The Solid Report. And
what's it on YouTube?
It's on YouTube. It's also on the Wolf Financial X account, but I'm streaming it through my YouTube account as well. I did a stream today where I was doing that kind of a parallel stream, but I'm basically going for 4 live streams a week. And it's pretty demanding because I work full time as well. So I'm not trying to put too much time into it, but I'm like really focusing on like trying to build, like my goal is to like become like the Stephen Colbert, right, of the stock markets. And I feel like I really enjoy the audience. I really enjoy you guys and everything. And I want to bring what you guys want to see, on like a day-to-day basis. And, I'm not trying to like steal the spotlight or anything, but like I really enjoy this stuff. Like it's really cool to explore the markets and everything. It's really cool to invest. But I'm going to be continuing doing it on my channel. But there's I'm sorry, I forget exactly what the ticker is for the Wolf Financial one. But you can always tune into my channel and I'll be on there tomorrow. I'm actually going to do the Oracle earnings tomorrow, just for an hour, just to kind of dig down into the niche level of what I'm seeing in Oracle. But I'm not going to stream the earnings call. That might be a little too long. So if you guys want to hear that perspective, it's always going to be recorded. You can always check it out after. You can always check out Ahmed's stream if you want to. I'm not trying to steal the spotlight, but just providing my perspective on it. And yeah, Adobe earnings are tomorrow as well. I think Adobe is pretty undervalued. I think the valuation is getting a little bit ridiculous for for Adobe right now. But I have no position in it. But it's like another one of those things where it's like, hey, look, if you're like a 5-year long-term mindset, it might be pretty attractive for you. But gonna really be digging into those numbers for those two tomorrow. Obviously, we have FOMC tomorrow as well. We'll see what happens to that one.
Well, we got Sam's channel up on the screen, everybody. Please go subscribe. He puts out great stuff. We also have Ray linking the Wolf Financial one. So you can catch him live tomorrow. Sam, thank you for joining. Really appreciate it. We'll schedule something for you to come back.
Thank you.
All right. So tomorrow's going to be interesting, everyone. We got Oracle, we got the Fed, we got Adobe, we have Broadcom the following day. We will see what happens. Palantir is pumping. We'll see what Nvidia does. See if the AI bears come out and piss me off enough where I write another 2,000-word post on X. That could definitely happen on Thursday, considering I took the day off from work, even though I'll still be kind of working, but I will probably be writing a big X post or streaming during the day. We'll see. I think one of the things that Sam said that I want to hit on is he's 100% right. With my mindset, I don't care about a quarter or 2 quarters. Because I'm looking at most things of 3 to 5 years, maybe longer. So we'll see. I don't play in the same realm as Sam. A lot of those companies I just don't invest in. I am more geared toward the bigger companies or dividend income. So I do think Nvidia is a great company right here. I think it's very interesting. And if we get a pump tomorrow, I'll probably start selling calls on it again. We'll see. We will see what happens. So tomorrow I will be live with Tanner at either 8 or 9 o'clock, yet to be determined. I will call him in a little bit and figure it out. Maybe I'll be able to get on beforehand. We'll see. I'm going to go for another 13 minutes. So just start firing stuff out. When I say firing stuff out, I mean questions on the comment section, guys. Cookie flavor of the day is always milk chocolates. I have not really looked into Amcor yet, no. TerraWolf is something I am loosely interested in. I don't even know what that means, Ray. About Oreos, I have no idea. Not a cheesecake fan. As Metal Flames is sealed, not opened. I own both UTG and UTF. Orbital AI, I have no idea what that is. Nebius is interesting. I got to look in it. I did not call Chris before he went into Nvidia, but I think he got convinced last night. You can, if you want to see Chris and I going over last night a bunch of stuff, the Nvidia part comes at the end of this. So I'd say toward the end, around the 1 hour 45 mark, you can see Chris and I breaking down Nvidia, and I think he broke down last night and realized he needs to buy it, and I think that's why he did it this morning. Yeah, I saw Alexandria's down. I got to look more into it. Diaz going to the Dodgers. I don't really care about that. Charles, thank you. I'm glad you enjoyed the conversation. Best dividend stock, no such thing. There's a lot of great ones. Pacific Biosciences, I don't understand anything in that realm. I would be doing a disservice looking into that stuff. I think robotics is the future. I mean, there's not many new things on the radar. The newest thing that I got on the radar is QXO, and that's been running pretty well, but that's a long term for me. Porterhouse over ribeye. Ben & Jerry's flavor Americone Dreamin', followed by Cherry Garcia. Will the Dodgers three-peat? Probably. I will be writing another article on Pfizer at some point. I don't know anything about Path. I am not going out of town for Christmas. Ethereum end of year is interesting. I think we may get back to 4,000. We'll see. I used to own BKRB. I got out of it. I don't know if I'm a beast or not, but I will tell you when I end the stream, I'm going to finish my Chevron article. Porterhouse over ribeye. I don't know what Hess M is. I'm going to assume that's Hess Midstream or Altria Group. I mean, I'm in Altria, so I don't like owning restaurants, so I'm not on Texas Roadhouse. Is Rounders Matt Damon's best movie? Absolutely. Am I tax harvesting any stocks? No. You guys are going to think this is crazy. I'm not a Philly cheesesteak person. Sorry. I don't think cheese on red meat goes well. Just me. I want the red meat. I'd much rather have steak teriyaki with peppers and onions. No, I said I don't like owning the restaurant stocks. I don't know if there's a best movie of all time. There's a lot of great ones I could watch at any given point. Pizza. I want to say that I could live on steak, but I don't think I could. I probably could. I feel like pizza is just pizza. I mean, you can legitimately enjoy cold pizza for breakfast and pizza for lunch and dinner. I feel like steak for breakfast, unless you're putting it in eggs, is a little difficult. So I think it's got to be pizza. Oh, you could absolutely live on steak and water. I'm not saying that you wouldn't. I'm a big fan of VOO, and I do not think that Amit has watched Rocky or anything. Favorite Christmas movies, Lethal Weapon 1. Don't start with pineapple on pizza. Let's not make that a real thing. Verizon over AT&T at this point. Braveheart is a masterpiece and is easily a top 10 movie of all time. Whoa. Got somebody that shot -1 on Sunday. That's a legit accomplishment. I mean, look, I'm in QXO for the long haul. I think it's going to do really well. I will be taking PTO on Thursday. Best trilogy ever? Man, I don't know. A lot of good ones. I mean, a lot of people would say Lord of the Rings. I don't know. Hangover's amazing. Michelle, what did you cook tonight? Departed is probably a top 10 movie for me. I watched American Gangster on Sunday night or Monday night. I don't even remember what night. I watched American Gangster a few days ago. Man, that's a masterpiece movie. Masterpiece. Oh, whoa, whoa, whoa. Somebody's saying kickboxer. All right, Matt Watson, kickboxer or blood sport? Nice, Michelle. Nice. Yeah, I think Bloodsport. I mean, they're both so good, but Bloodsport is just on another level. I mean, obviously, I saw our 24K portfolio last night. I don't know. A lot of companies I own in there, I can tell you that. No, nobody had Tanner crash out report. How am I avoiding going bald? I don't know. Yeah, I'm going to agree. Bloodsport's Van Damme's best movie, and Double Impact is super underrated. Just saying. I mean, favorite comedian. I don't know. I mean, look. Is it Eddie? Could it be? Could it be Axel Foley? Could be. I don't know. There's a lot of great ones. Eddie is just on another level, so it's hilarious. There's a lot of great ones. Well, I gotta tell you, I don't have to worry about sacrifice trading stocks because I don't trade. So I like SPYI right now. I think the numbers tell the story. The numbers are better than Jeppy. Yeah, listen, I lose a lot of time every year. I don't really start taking time off until middle of November. All I do is work. So oh whoa, whoa, whoa. Probably Billy Joel. I don't know. I start working when you're like 13 and just never stop. You just don't stop. All right, we're going to end it on this. All right. Best Steven Seagal movie. That's a tough one. Because on one hand, you can say Out for Justice is the best one. A lot of people are going to say Under Siege. A lot of people are going to say Above the Law. I'm doing my eyes closed so I can't see the chat. Then you got a cohort that are going to say Hard to Kill. And then you're going to have the diehards say Marked for Death is underrated. This is, if you are an 80s and 90s movie person, this is a very hard question. And as much as I want to say Marked for Death and go with the underdog, there's something to be said for Out for Justice and Above the Law. And it just becomes, are you going with freaking Seagal going after Richie? You going with him being freaking Nico Toscani? It's between Out for Justice, Above the Law. It's a tie. I can't do it. I can't do it. Can't do it. So we're going to end it there. I need to figure out dinner and finish my Chevron article and relax for a little bit. Yeah, Mason Storm, freaking Hard to Kill. Great movie. So Tanner and I will be on tomorrow. I will see everyone tomorrow. And I will be on for a while on Thursday since I'm taking the day off. Have a great night, everybody. See you tomorrow.